Good morning. Happy Monday. Huh, what a great day. Hold on, let me, I swear, one of these days I'll get this right. One of these days. So I've mentioned it before. The issue with the camera is, so I have a stand, and the stand has an adjustable head at the top that has variants where you could turn it. And every time you put your phone in, you have to open up the mouth of it, right? Like the jaws to go ahead and close on your phone. In doing so, it also turns the whole thing. So actually, you know what? I think there's a screw for that. I'm going to look into that, but I'm pretty sure actually now that I think about it, there is a screw that disallows that or prevents that from happening, because I imagine someone thought of that before. So we're going to let everyone get in. I have a giant bottle of kombucha, living the healthy lifestyle, right? And we'll get started in 1 minute. I gotta tell you, Monday really does have like the most chartiness. And I understand Mondays, but like Monday, I'm like running around the building looking for like, let's go. In fact, I look up at the sky and say, sun, come on, what are you waiting for? Just get a certain sense of what it's like in the Anthony household, right? So we'll give it another 10 seconds and let's just get into it. Now, mind you, what I know of the market this morning, I looked at it last night, the futures, and they were down 60, 70, 80, 90. And then this morning I looked at it and they were plus 50 or 60. And then about, I think like 8:45-ish or 8:30-ish, they were down 30. The S&P was down and NASDAQ was up. So we'll see what it is when I get to it. But I always like to not know where things are so that I'm able to speak without any bias. All right, we got some people finally here. Cool. Welcome, everybody. I see that your alarm clocks are working, but maybe you need new batteries because they're not working as great, right? And that's a half joke. All right, so let's get into it. So 2 weeks ago, hey, Don. So and Don, I did get your email about the YouTube and to take a look at it in NFTs. I will hopefully get to that, hopefully today, right? And when I do, I'll email you back. All right, so let's get into it. So as of 5-6, okay, cool. As of, I believe, 5-6 weeks ago, we had identified March 14th as the bottom of the market. That we believe that anything before March 14th would represent a low that would be erased after March 14th. That anything after March 14th would be higher than anything before March 14th. And with that said, it's been correct, right? So March 14th we like because it's Pi Day 3.14. And we've noticed that a lot of cycles, so the world is cyclical. We believe in cycles. We believe in flow. We believe in trends. We believe in energy. We believe in waves. All of that is some type of variation of the calculus of 3.14, which is pi times radius, I believe, equals circumference. And not to get too much into physics or geometry, I think that's geometry, but it's quite relevant. In fact, if you take a look at nature, you take a look at anything 3.14, it just happens to be everywhere. And that might be a consequence of me looking for it, so I find it. And that has a certain confirmation bias that I'm immune to, right? Like I can't, by definition, you cannot see your own confirmation bias, right? So if I go around and say, man, every girl, they just want to shop, right? Then what's going to happen is every time I meet anybody, any girl for that matter, and this is before I was married, right? So fair, let's just get that out of the way. But any person I meet, they might be like, oh, I don't really like shopping. I don't like shopping. And then they're like, I need a toothbrush. Can't wait to go to Walgreens. I'm like, I knew it. And of course, well, you don't make a toothbrush in your basement, right? Like you have to go shopping for it. But the confirmation bias is having a bias to something, having an opinion, and then finding the confirmation of it in everything you see. So 3.14 might be that for me, but nevertheless, it has held true. In fact, since 3.14, since March 14th, I believe the market's up probably 21 to 2,300 points. It was up 1,800 the first week, and I think last week was probably like 300 or 400. Like I don't remember day by day, but so let's just say it's over 2,000 points. Now, does that mean that the market will therefore go up every single day in perpetuity? That the bottom of the market means that the market can only go up? And I think not, right? Like I think that was actually true in 2020 because the market had gotten so low because everyone was going to die of this crazy, dangerous disease that we don't know about that's spreading like wildfire. But at the same time, the Federal Reserve and government policies and everything was to go ahead and put out the fire with the hose of water, right? We're just going to give money everywhere. We're lowering rates. We're giving this. We're giving that. We're doing stimulus packages. We're printing money, whatever. So I think when the market is priced for Armageddon and then the opposite is true, the circus comes to town, right? Like if you live in a town that there's not even a job, 90% of people don't have jobs, and then all of a sudden the circus comes to town and everyone has a job, one would say that the restaurants in that town probably are going to go up in value for quite some time. That was the market in an elongated version, right? Like in a year, 2-year type of version. I don't think that's the case. I don't see the Federal Reserve lowering rates. In fact, they're raising rates. I don't see the Federal Reserve giving money. In fact, they're taking money. I don't see this Congress, this government, this administration being able to put through any type of stimulus packages. In fact, they have big deficits and big, budget shortfalls, and they're not going to get anything through because actually you have an election year, right? The midterms of this year, and the Republican Party, all but as long as they could ensure that there's no election shenanigans, right? And I believe it's unpopular to say that the last election was fraudulent, so I'm not going to say it, but to go ahead and believe it's unpopular while also believing that no one believes it makes you a bit foolish, right? Like Maya Angelou said, people don't remember what you said and they don't remember what you did, but they remember how you made them feel. And you can't go ahead and police how people feel. It's in their minds, right? It's in their hearts. So there is a very, very large population that believes that they feel the last election was stolen, and then they have a confirmation bias, right? Well, he couldn't get 12 people to a rally, but he got 81 million votes, right? He got 10 million more than the first Black president ever, who by all accounts is everyone's favorite president, and he lives in a basement and smells children's hair, right? So, and that's not me saying it, although I'm just the messenger of it. That being said, if you ask those people, they would say that the Republican Party is going to clean house this election season, assuring or despite or making sure that there's no shenanigans, right? So if you were the party coming in and you were going to take over the House and you were going to have the Speaker of the House, no more Nancy Pelosi, you already have the Senate, the American people see gas prices high, they see inflation high, you kind of have like a perfect scenario where you could kitchen sink the country. What does that mean? You can walk in and because you're the new party, everything that went wrong, you blame on the old party, right? So you walk in and say, oh my God, all this stuff is terrible. That was them. Now, guys, it's going to take a couple of months, but we're on it. Which means you could go ahead and blame things that are actually your fault on the other people, right? Like, because to the victor goes the spoils. The victor writes the history, right? So you can, what is going on or not? Well, we're talking and we're relating all this stuff to market. So if you could just stay with us, we love that you're attending with us, right? So with that being said, you can come into this and go ahead and blame the party for everything. In fact, it would behoove you to start from such a small base. Now, I believe, President Obama was able to do that. Because when you remember, President Obama came in '08, right? Yeah, '08, '12, and '12, '06. Okay, he came in '08. What happened in '07? Right, you had the biggest stock market crash. Well, not the biggest one, but a very, very large one, the financial crisis. In fact, '07 was up, and it happened in '08, and I believe it bottomed in March of '09, right? But by the time the stock market bottomed, unemployment was still bottoming. So while it was all coming down, President Obama had the opportunity that in his second year, in '09, he was able to show job growth that was at the highest percentage anyone's ever seen. In fact, Joe Biden was able to do the same thing. Oh, Zoom keeps pooping out. Oh, well, I'm sorry. If anyone else has that experience, please share it with us. Otherwise, I believe it might just be yours, in which case we are recording this and we are posting it. It will be posted in our Facebook RHINO Wealth group, as well as the link will be sent via email tomorrow morning. So please do not be too alarmed if your Zoom is pooping out. You will have access to this within 1 hour. That being said, so Joe Biden had the same availability, the same luxury. Because what happened before Joe Biden got in? Pandemic. What happened during the pandemic? Everyone was unemployed. Places shut down. The whole country was really having difficulty. In fact, I believe we got up to 10%, 12% unemployment. So Joe Biden walks in during a reopening. In fact, if you take a look at the COVID charts, what's it called? The infections, they peaked on January 21st, 2021. Now, I don't believe in coincidences too much. I'm not one of those people. And again, right or wrong, you can't prove coincidences is true or not because there's X amount of variables that all have to do with confirmation bias. So I'm just sharing me with you. But that was the same date that Joe Biden got elected. So to believe that is believing highly coincidental, or that Joe Biden's election was such a moment in time, such a strong moment in time that the aspect of him being elected, the strength of his election defeated COVID by itself. Or that the numbers were a little high to go ahead and make sure that the incumbent was not reelected because with numbers high, wow, look how bad President Trump is doing. We need someone that could do better. Whatever the case might be. So in Joe Biden's first year, he had the most explosive job growth since Barack Obama. So one could say, well, Joe Biden, for whatever you think of him, can go down as the biggest stooge of all time. But the history books will remember that he owns the record, or at least the top 3, for the best employment during a presidency. He will own the record for defeating COVID. So if you take a look at someone's, as a president, what did they do there 4 years? I got to tell you, if the history books writes those 2 things about him, do you think someone 50 years from now is going to look back and remember that Joe Biden called his vice president Harris president how many times? That Joe Biden couldn't put 3 words together without thinking of Jell-O, right? Like no one's going to remember that. The point of all this being, rather than me having the opportunity to speak about Joe Biden a little bit, is that when you have an incumbent party so obviously on the way out, as a new party coming in, you do not want to throw them a lifeline. As a Republican Party, knowing that they're going to come into power, do you think that they have this ambition, this motivation to go ahead and help the incumbent party so that 2 things would happen? A, the incumbent party would actually be moving up in the polls, giving a bigger challenge in terms of midterm elections. And B, the incumbent party will be leaving off, if they still lose, they'd be leaving off on a high note, meaning you as the new party would be compared to where things were. So if I need to go ahead and I'm going to make $5 this year, well, if I made $10 last year, my income went down 50%. If I made $1 last year, my income went up 500%. Those 2 sentences are very different, even though the money I made this year changes 0. Therefore, as a new party coming in, 2 things are true. 1, you want to make sure the last party looks like the complete buffoons that you want them to be perceived as being so that you win the elections. Two, you want them to leave off on such a bad note that anything you do, even if you make 1,000 mistakes, you're still going to be seen as better because the bar was set so low. Therefore, when we go ahead and calculate within our mind, do we believe that this administration has any ability to put through any package of stimulus or whatnot? We think the answer is no. And if that's the case, then recession is surely on the way down the road, because you cannot go ahead and not throw lifelines to an economy that you have artificially pumped up on government stimulus and then take it all away and not give it to them while the Federal Reserve is raising rates and taking money out of the system. That is a shock. That is a shock to everyone. And not a shock in terms of, oh my God, I can't believe it, but a shock in, I had this much money last year and I don't have it this year. Because the Federal Reserve is an institution that's going to outlast the presidency. And that institution has credibility that goes on for centuries. That institution does not want to preside over an economy that has a 10% inflation rate, because that institution then loses the power that it wields in terms of credibility. Because when the Federal Reserve comes out and says something, people need to believe that they're credible, because they then need to get behind them and say, all right, well, the Federal Reserve says they need to raise rates. We better be behind them because they're the smartest people in the room. If the Federal Reserve says we need to raise rates and the last 5 times they said it was a complete farce, then people are going to say, well, yeah, they've said it before. Like, let's just let them hold off. Let's see what happens. We know more than them. Therefore, 2 things can be true. A, the current administration isn't going to be able to throw any lifelines. And B, the Federal Reserve is taking away lifelines. Therefore, if you have a confluence of all these events, you at least have the soil for a market to move lower. Now, 2 weeks ago, we said, well, all of that was priced in. We know what we know, and we know what we know. Therefore, the market going down so much was essentially everything that we're talking about today priced in for the year. Therefore, the market, we believed, was going to continue to go higher because it was going to climb this wall of worry, as they call it. Everyone's worried about everything I just said. In fact, there's many people that believe they just came up with it today. Not commentating on me talking about you, but every day there's people that get smarter. Because think about it, if something is going to be known 100%, well, there is a point where it's only known 1%. The transition, the journey from 1% of the population knowing to 100% of the population knowing takes duration. So maybe Wednesday, 1% no, then Thursday, 2% no, then Friday, 10% no, and so forth and so forth. What we've described, we do not believe 100% no, which means you're on the journey to that. Therefore, we believe people are learning this. So the question then becomes, all right, Anthony, if you believe the market hit a low and you're now sharing a story that sounds like the market's going to go back down, how do you reconcile those 2 things? Well, like we said in the beginning, we believe the market has moved up probably 2,500 points since that happened. So can 2 things be true? Can March 14th be the low, and could the market pull back from where it is? The answer is yes, right? You have 2,500 points cushion to pull back while still proving the first thing to be right. And again, the art of not knowing what you don't know is by definition one of which you're completely oblivious to it. Therefore, I don't know what I don't know. Maybe there's something that I'm still part of that journey from 1% to 100%. Maybe there's something really bad that's about to happen that I don't know about. Therefore, proving that my March 14th low was incorrect. Maybe we go lower than that. All I know is I believe that to be correct based on what I know. And I also believe that this market is not going to continue higher in perpetuity, because the confluence of forces is going to be very difficult for the market to move higher. That being said, that is the definition of climbing the wall of worry, right? So I know I just threw a bunch of like, yeah, but. So maybe I'll run for president one day, right? Because I think I just kind of like I think I just took every point of view. So let me clean it up for you. When I'm deciding what point of view makes the most sense, I then have to look to the markets. I have to look for confirmations, not confirmation bias, which again, I'm going to be immune to, or actually, I guess the opposite, sure, I'm completely susceptible to, because my immunity and not being able to identify it. But something that we have said longer than this immediate forecast is that volume is the lie detector of the market. We have always said that. That is something that is a pillar of what we believe: volume, price, and volatility. That goes back as far as, RHINO was born. That goes back even when Anthony didn't know RHINO existed. That goes back to when Anthony was given Rhinoceros Success by Emilio Di San Luciano, and he said, read this and maybe I'll work with you. That goes back to that night. I read the first 11 pages, texted him and said, I don't know if I'm supposed to text you or not, but I want to run through a wall right now. In which case he texted back and said, all right, I'll work there. You're the type of person I want to work with. I was 19 at the time, right? So, welcome to RHINO being born. The point being, the volume has been, I don't know how to put this lightly, pitiful, right? It's been moving lower and lower every day, while the market's been moving higher and higher every day. Now, when a market's moving up and volume's moving down, what does that tell us? There's less buyers at the higher price. But the fact that and volatility has been moving lower, meaning the participants in the market are feeling quite content. They're feeling quite non-volatile. They're feeling quite comfortable. But the volume continues to go lower, which means the people that are representing the market. Now, remember, the market is a price. It's a nominal price. It goes up and it goes down based on buyers and sellers. So two things can be true. One, if there's one apple and one person buys it for $5, the market price of the apple is $5. If there's one apple and there's 20 people in the market, and actually, let me reverse that. Like Missy Elliott, flip it and reverse it. If there's 5,000 apples and there's 5,000 people in the market, and the apples get sold for $1 because the more people in it gives them more price discovery, right? Like, you can always fool one person, that's not difficult, but to fool 5,000 people is more difficult. So the larger number of people go ahead and reveal price discovery is what it's called. The more people participating in a market is a more accurate price, right? Because there's more people all consenting to what their beliefs are. So if there's 5,000 people and there's 5,000 apples, and each apple on average gets sold for $1, the market price of the apple is $1. Now, what hasn't changed is the apple. The only thing that's changed is the volume. Therefore, two things could be true. One, the market is priced where it is, and the market is worth what it is. Two, though, the market is either A, overpriced, or B, underpriced, because the volume is not confirming it. The volume is not commensurate with true price discovery. The volume is commensurate with a couple of people just trading the market around, which means then you have to then move to the next leg. Well, where is the volume? Are they sitting on the sidelines because they decided they're never going to be in the market again? We think that's not true, because the market is the place to be. All the money flow is coming into stocks, because who would actually want to put it in government bonds? In fact, governments around the world have just broken a new record for having the most debt in the entire history of the world. Therefore, when you see bond yields going up, what does that mean? Bond yields and price work inverse. So if I'm selling bonds, the yield goes up to go ahead and attract new buyers. All right, no one wants to buy the bond at 1%. How about 1.10? 1.2, 1.3, okay, 1.3. So bond yields go up while bond price goes down, which means people are selling bonds. Where are they putting the money? Well, you can see the US dollar going up very strongly. So people are leaving it in CDs. They're leaving it in cash. Now, the rates of 1 month CDs are like 0.01% or 0.1, some really, really low number. In fact, what's your savings account rate? Like, that's kind of the same rate. So do you believe in an inflationary environment where inflation is going to be 10%, between 8 and 12% for the foreseeable future, that putting your money in a 0.1% CD makes sense? No. Well, that means you're guaranteeing yourself a 9% loss over the term of the year. In fact, if you put in a 1 year CD, let's say it's 0.5%, right? that means you're guaranteeing yourself a loss of 9.5% for a year. That doesn't make good sense. Well, the market's going up, so why don't you take the money out of there and put it in the market? Well, that would have made sense if you had the belief that the market has moved a little bit too far. You would be holding the market waiting for it to come down. So we believe there's a lot of volume out there that's just sitting waiting for a market to come down. Now, here's the thing about that. One of two things then happen, right? And I know I'm saying one of two things a lot, but this is a research and learning platform. So I'm never going to tell you what to do. I'm just going to open your mind to what the options are. And you're welcome to pick your own end, right? Like you and I may not come with the same conclusion. In fact, Friday, my stock was down 19%, but the market's been up 2,500 points. Maybe someone said, Anthony believes the market's going up. I believe the market's going up, but he's buying puts on Eli Lilly. I think that's a little silly. I'll just go ahead and buy calls on the market. There's a good chance that people in this are lapping me right now, right? So let's continue. So if the money is on the sidelines, what then happens? One of two things. Either the money comes in, actually, two things. If the money's on the sideline, one of two things happens, right? Either the money stays on the sideline or the money comes in. Now, if the money comes in, it comes in one of two ways. Either the money comes in because the market just looks like it's going to go forever and the money's like, oh my God, I can't take it anymore, let me buy it. Or the money waits for it to the market to come down to say, oh, now's our opportunity. Or the money just stays on the sidelines, which again, we don't think is going to happen because that's a guaranteed 10% loss. Okay, so the market is going to do one of two things. Either it's going to continue going up and then all this money is going to flood the market because it says, hey, you know, we're not waiting anymore. This train's leaving the station, and then the market goes zoom. Or the market pulls back quite aggressively. The money finally comes in and it does not see the lows that it saw prior to March 14th because the money is waiting to come in and therefore it buys it as it comes lower and then zoom, right? The only way that we know how to go ahead and choose which one of those answers is correct. Now, mind you, before I say this answer, both outcomes have the market moving much higher. One has a little bit of downside before it moves higher, and one has it just continue moving up, which means if you're a reasonable adult that has money for a reasonable investment purpose and is not looking to trade the market, but just wants to be comfortable knowing that the market's going to continue to move up so that they could take their money from 1% to 5, 6, 7% return, 10% return, then you shouldn't be so cute like we are in terms of trying to trade it. You should just get in it. And that's not to anyone indirectly, that's to the world, right? That being said, let's go ahead and put that aside because that's not what we're doing. We're trading it. But if somebody was looking for a moment of reasonable clarity, all right, do I think the market's going to go up or down from here? We believe it's going to go up. Therefore, knock yourself out with long-term investments. And I say that because my wife and I went ahead and created an UPMA account for our son and a whole bunch of different accounts that are just you buy every month, right? So we personally are putting our money in buying the market, believing it's going to go up for the next 18 years, right? So we have a long-term perspective. So full disclosure, right? Now getting back to this. So how do we know if the market's going to just continue going up? Well, volume. Every time it goes up, it's on less volume. And we're going to show the charts. We're going to get to that. But it's on less volume, meaning it's getting to a point that there's no new buyers at these levels. So when there's no new buyers, what happens? And it's a sentence, I'm not sure we've always said it. I'm not even sure we've ever said it. But volatility happens suddenly, right? I know we have said the sentence that stocks take the stairs up and the elevator down, which means when things are moving up, you say to yourself, well, it's been 2 weeks of great stuff. All right, there might be a bad day or two, but, I don't think there's going to be 2 weeks of bad days. Yeah, how about if you go up 100 points a day, and then over those 2 days, you go down 2,000 points, right? Volatility happens suddenly. Stocks go like this. Because think about how you feel when you're complacent, when you're happy. Oh, I'll get to it when yeah, it's going to be there. It's fine. Yeah, the market's just going to keep going up. No problem. When I get paid Friday, I'll put more money in, which means as it goes up, it offers a level of comfortability where people say, okay, I'll just put more here, more here, more here, more here. When it's going down, what do people say? You just get me out. Get me, I don't care. Did you see? There was a nuclear bomb. Just get me out. Which means the behavior of a market going up and the behavior of the market going down are quite opposite. Meaning, if you believe there's going to be an event, or if you believe there's going to be a moment that things go down, you must also believe that that downside is going to be exponentially different than the upside. So it doesn't mean that the market's going to go down 2,500 points, but could the market go down 1,000 points over the course of 2 days? Do you think it's unreasonable that a market could go down 500 points today and 500 points tomorrow? No. Do you think it's unreasonable that it could then go down 300 points the next day and then 200 points the next day? Meaning the market went down 1,500 points over the course of 4 days and then went back higher. What do you think the news media would be saying, the financial news media, when it goes down? Yeah, we told everyone there's a lot of volatility out there. There's a lot of landmines. You just got to be more careful. In fact, we've been saying that fear happens suddenly. So we see that the volume is moving lower as the market's moving up. We see the majority of the money flow is sitting on the sidelines waiting for something. We feel that that becomes its own self-fulfilling prophecy, because there will be a point that the market cannot continue going higher based on the variables we know today, which is the market participants becoming less participating as it goes higher. Meaning that if the next person is not a buyer, the next person therefore is a seller. And if the market goes up and has no more buyers and then people start selling, then fear and volatility happen suddenly. But we do believe there's money that'll come in and buy that. But that money has a vested interest to go ahead and allow the market to go lower. In fact, that money wants to buy low because this is the money they're putting into the market. Therefore, that money, which conceivably is the large money, which is the institutions and hedge funds, might be ones that's fearmonger a little bit, might be ones to short and press things down, might be ones to go ahead and hold off and let things cascade, might be the ones that come on TV and say, oh my God, this is like the worst thing we've ever seen. Therefore, this is all a cute story, right? Like Anthony lives in Storyland. I just kind of told the future as I see it. But again, what we're always going to say is the reason we share every single thought in the most transparent way, where one thing leads to the next, while offering you this path or that path, is not to go ahead and impress anyone. It is to impress upon you, though, that we're fully thoughtful. And that if we're wrong, we can identify the cog in the assembly line that is the thesis of where we went wrong. We could go ahead and change that and say, oh, we thought we were going to go left, but in fact, we forked right. So now let's go down that line. Let's go ahead and improve and evolve our thesis to go ahead and be correct. Which means, A, we're not immune to losses. We take losses, not as often as gains, but because we're always learning and we are our own AI in terms of how we approach the market, we will be wrong sometimes. But because we're constantly allowing ourselves to evolve, and because we constantly have the respect to say that the market is always right, and if we disagree with the market, that's AKA we're wrong, we have the humility to go ahead and change. In fact, as you look at our ledger, you'll see that there have been times that we took a 70% loss. You'll see that there's many times that we took over a 40% loss. You'll see that there's 5 times that many times we took a 40% gain. You'll see that on our McDonald's position, we were down 70% and we ended up plus 100%, while never leaving the position. Because our belief was we firmly see what's going on, but it's just market pricing, that we believe in the outcome that we still believe is going to come to fruition based on everything that we know. Now, before I look at the market, I'm going to give a little commentary, probably like 2 minutes, on our Eli Lilly position. So Eli Lilly is now currently trading at 32 price to earnings multiple. I believe the market's trading at like 24, 25. Now, Eli Lilly, I believe, is the best performing pharmaceutical company or healthcare company this entire year. Eli Lilly looks like it broke out of a chart in a very, very long range, blah, blah, blah. Now, that's all bad, right? If you're shorting a company and it's doing all that stuff, that's not good, right? Like, because we're down on it. But we've seen Eli Lilly is not immune to, as the price has gone up, the volume's gone down. In fact, Eli Lilly, about a week ago, reached 295. It's, before it closed Friday at 289. In fact, Eli Lilly, the last 3 market days in a row, has sold off in the final couple of hours. Now, all of that plus $1 buys you a coffee, right? Like, means nothing. I don't have this written down, so I'm just thinking out loud. So what is the bull case for Eli Lilly? What is it that's going to say Eli Lilly is going to go higher? Well, they would have a new drug or something that's really, really close. In fact, they postponed a drug and they got disapproval on a drug the other day. Okay. All right, well, COVID, right? It's a pharmaceutical, people run to healthcare. Yeah. Well, there has been COVID spikes in China. In fact, they've closed down some ports. I think Dr. Fauci was talking about a V2 variant or whatever, but he said it's not going to be debilitating, but it'll be rampant. Okay. So do people believe COVID going forward is going to be as bad as COVID in the past? Because I would certainly justify running into a pharmaceutical or a healthcare company. I don't think that's the case. Are people afraid of the markets, in which case they were running to safety? All right, we're going into pharmaceuticals, we're going into utilities. Yeah, that was the case. And in fact, Eli Lilly went up while the market was going down. And then Eli Lilly went up again as the market went up. So it seems that it's not market correlated, it just seems like it wants to go up. But Eli Lilly going up during a down market had very high volume. Eli Lilly going up during an up market has a lot less volume. So what I gathered from that, and plus it hit at 20, it's now only on the chart as a 19 because it dispelled that 20 during the day. But we stepped into it at a 20. It was a 20 on the top side, and we've been waiting for it to come down. In fact, it crossed over the lines. It has lower volume. Everything tells us it's going to move lower, and now we're just waiting. So what would go ahead and cause us to, all right, guys, we were just wrong? Well, the recent high of Eli Lilly was 295. If it gets over 295 and makes a new high, then, my bad, right? Like, I'm getting out of it. I'll take whatever loss. Or if it's still stubbornly over 290 by the end of this week, because then I only have like 20 days left and we're not going to allow the option to deteriorate on us. So we'll take a loss. So those are the 2 events that will cause me to take a loss. And I say that out loud because I want everyone to know where I stand. Because if I go ahead and sell it, and then I show everyone the next day that I sell it, and if someone is such a rule breaker and doing exactly what I do, they'll say, well, Ant, you didn't tell me you sold it. And I'm going to say, well, I don't tell anyone to sell it. And you're going to be like, well, this is quasi, kind of, sort of, maybe. And I'm going to say, yeah, well, by the rules of the law of the land, it's not that. Therefore, I'm telling you now, so we don't have that as a situation. What would cause Eli Lilly to go down then? Well, if the market sells off, everything goes down, right? So we believe the market sell-off is coming. Therefore, we believe everything's going to come down, including Eli Lilly. All right. Well, what if the market continues to go higher, Ant? Well, if the market continues to go higher and has that real like oomph, where it's just like, okay, that money's coming in like we spoke of, then where is the highest beta? Meaning, where's the biggest bang for your buck? Is it a healthcare company that's at all-time highs already? Or is it going to be Tesla or Nikola or Fang or Tech? It's going to be those companies because the market's saying an all clear sign, which means there'll be a rotation out of the safe companies, the healthcare companies, and they're safe because people always need healthcare, right? It's recession proof, and it'll move to that. So there'll be a sector rotation. So we believe on all fronts that the near-term future for Eli Lilly is down. Again, if we're wrong, we have identified points that will force us to sell, but we will hold till something happens. And by the end of this week, we will have exact guidance on what we're going to do, because hopefully by the end of this week, we're out of the stock, because I don't like holding stocks that are down. Well, I would like the stock to be down, but unfortunately I bought it to go down and it keeps going up, right? Can't win. All right, so that is our commentary. It's now 10:40. Let's go do a bit of a screen share, see where we're at today. Okay, we'll move that over there. I'm not looking at the stocks. I'm just pulling it up. So when I do a screen share, you don't see the video of me streaking in my neighborhood. Just kidding. All right, here we go. So let's refresh this. And whoa. Sometimes I impress myself. All right, the market's down 160. The S&P is down only 3. The Nasdaq's up, but the Nasdaq's up because of Tesla. Tesla is, I don't know, one of the 5th largest company, maybe. And Tesla, I gotta tell you, Elon Musk is so cool. He just knows what he's doing. This guy. So RHINO has a coin that's coming out, right? So everyone knows this. And there's a lot of Elon Musk that we learn from, a lot of Steve Jobs that we learn from, a lot of Warren Buffett that we learn from, in terms of being the face of your company and allowing people to like you. Because if they like you, they believe in you. And if they believe, and it's twofold, right? They have to believe in you and they have to like you. Let's put that out there. But if those two things are true, they have a tolerance. They want to be a part of you. Therefore, their number one priority isn't exactly what has your stock done for me lately? It's all right. I believe in your long-term vision. So I'm a believer. I don't just sell. I'm not a fair weather friend. That being said, Tesla knows it has that. So Tesla went ahead and split its stock many months ago and everyone bought it. Well, what does a stock split mean? It means you take a pencil, you break it in two, and you give the pencil back. So instead of having one pencil, you now have 2 half pencils, right? Nothing changes, but people were like, oh my God. So if I buy 10 shares now and you do a 7-for-1 split, I'm going to have 70 shares. I can increase my shares by 700%. I'm in. Yeah, but the share price also goes down. What's that come out to? 86%. But here's the thing. So many people liked it that they bought it and the share price only went down like 50%. So net, everyone won. What Tesla's doing now is they're asking, I love Tesla because I do this all the time, right? They're asking their community, hey guys, we're thinking about splitting the stock again, which will allow us more shares so that we can give you a stock dividend. What do you think? Everyone's like, oh my God. So by owning the shares, you're going to give me free shares, which isn't really free. The whole price of the stock's going to come down to offset the price of the share they're going to give you. But everyone's thinking, oh my God, I have 10 shares and the stock dividend might be 1 or 2, and they're going to split it. So my 10 shares will go to 40 shares, plus I'll get another 5 or 6 shares. Home run. So everyone runs to the stock. So that being said, the Nasdaq's up on Tesla. So let's take a look at what's going on, right? So the VIX, which has kind of like a line in the sand at 20, has since bounced off it. And it's up 3.75%. Well, the Dow's down 0.4%, while the S&P's down 0.04%. So you would think this would be commensurate with that, which means the volatility of people is higher than it's warranted, meaning people are saying, yeah, I know the market's down 150, but this might be the stars. Like this is kind of what we were waiting for. All right. Bitcoin surges, which is a bit counterintuitive. When Bitcoin goes up, you would believe the market would go up because it's a risk asset, right? It's a very speculative asset. The fact that they're diverging, that the Bitcoin went through the roof and the market's going down, says something. It says we don't know what's going to happen, but we know we definitely don't trust governments. We don't trust bonds. We don't trust stocks. We want to be in this place where all of us believe the same thing. Because the Bitcoin shareholders all believe in Bitcoin. You will never see a Bitcoin share. They're different people. Have you ever spoken to someone that owns Bitcoin? Yeah, man, the government's going to go to zero. You can't own gold. You can't own anything. Armageddon's happening. I don't give a shit. I'm owning my Bitcoin because this is the safety. This is how I'm going to go ahead and save the world. And in fact, by doing it, I'm going to be a king in the next world. They're cool. But they also might be right. And again, I don't know if they're going to be right or not. I actually think Bitcoin's owned by the government because I don't see the government giving their currency away. I think the government wants to have a digital currency and they're allowing Bitcoin to grow so people believe in a digital currency. And then at the end of the day, they'll just all package it up into something, which, whatever. The point being, if something really bad is going to happen, Bitcoin is telling you that, because Bitcoin's not telling you we're trading with the market anymore. Bitcoin's telling you we're trading on something that's in the future. Oil slides 7%. Now, oil has been going up as a risk asset. All right, there's war, there's this, let me just pile into oil. Do you know how many people are in oil because they believe it's going to go 200? If you have oil down 7%, that's not a normal move. That's people just, all right, I'm down, just sell, sell, sell. So if the best performing thing, which oil and energy is the best performing sector of the year, is now free falling, and 7% is not a free fall per se, but it's certainly on the path of a free fall, what does that say about the next domino, the next domino, the next domino? So these two headlines alone tell us something we don't know is coming, something bad. 5 and 30-year treasury yields invert, which means you would be getting more money, right? You have a higher, let me explain bonds for a second. When you lend someone money, you receive a rate of return on that money. It's an interest rate. If you lend them money for 5 years, you get a certain interest rate. If you lend them money for 30 years, you get a certain interest rate plus some, because you're lending it for so much time. And because inflation always moves up as time goes on, our goal is just to get inflation down to 1 to 2%. But 1 to 2% means it's 1 to 2% every year. Inflation goes up. Therefore, interest rates are always higher in the future than they are today. And if they're not, it means that there's a recession coming. And what do I mean by that? That means that something so bad is going to happen in the future that deflation is going to take over, that the value of goods and everything are going to come down, meaning that people are going to have less money because they're going to have to buy those goods and services. Meaning, if people believe the future is looking like that, and what do we always say about bonds? They're the smartest people in the world. Bonds are the largest market in the world. So this isn't like a stock. No, it's trillions of money. So when the bond market says something, you need to listen. In fact, I believe the bond market is 100% when they invert the curve, and the curve they're looking for is 10 to 2s, which isn't inverted yet. But when they invert curves, there's always a recession. Therefore, the bond market's telling you, with the smartest and most money in the world, where everyone's volume is, something bad's happening. So oil says it, the VIX is starting to say it, Bitcoin's saying it, and bonds are saying it. I don't know. It makes me think something bad's happening. That's all. That's kind of like sitting at a table with Steve Jobs, Einstein, Ben Franklin, and I don't know who else is really smart. Like MLK, right? Like if they all agree on something and you disagree, you kind of better need to reevaluate what you thought. Okay. So those are the headlines. Look at Tesla, $73, right? So, and AMC is up 15%. These are, I don't know. They're the most speculative stocks, not Tesla, but Carnival Cruise Lines, AMC. All right, so let's see where stocks are. All right. So let's refresh this. I don't want to look at Eli Lilly yet. Let's take a look at the spiders. I don't want to look at Eli Lilly, so let's just put something else up there. Okay. Okay. Let's go ahead and get our handy dandy volatility. All right. So what do we see here? Now, remember when we drew this line and we said if it breaks this line, it's going to break out? I mean, I'm not really one to pat myself on the back. But, you know, it's not like, you got to remember, this line is on my computer. It's not on anyone else's computer. When I drew that line, it didn't have this mystical power that a whole stock market listened to. It's just that we know how people trade. So it broke out. Okay. So let's take a look at where we are. So volume was going up, right? A price was going up. volume was going down, volatility was going down, right? What do we say about that? That is Goldilocks. Price up? No, actually, we don't say that. We say that's concerning. Price up and volatility down is good, but we want volume going up too, and we don't see that, right? So this is concerning. This is something bad's going to happen. Well, not bad, but caution. All right. What do we see here? Price is now moving sideways, right? Okay, it's moving up, but does this look like it's much higher than here? No, it looks sideways, okay? And volume looks like it's moving sideways, right? So let me get this straight. Volume's going down when the market's going up, but the second the market starts moving sideways, volume starts, actually, guys, I gotta tell you, that's volume moving up, right? So when the market starts moving sideways, volume moves up. Okay. What's volatility doing? Well, it's still, it's actually ticking up over here. All right. So what is it when price is moving sideways, volume is moving up, and volatility is moving up? That's like danger, danger, danger. That's what that is. So we believe that the next move is here. Now, how low will it go? I don't know. Let's find some reference points. Well, first of all, let's see where it's not going. So as you can see, this line looks quite important, right? Topped out here. When it broke here, it went up. It bottomed on it, went up. Bottomed on it, went up. Broke it. Look how far down it went. You know, topped it over here, topped it again. Look how far down it went. Then it claiming it over this line. Now it's back at this line. So this is the line. So in fact, we can say at this point, it's either going to go much higher or much lower. Now I know, Anthony, stock's going to do one of two things, higher or lower. No, we're not saying higher or lower. We're saying much higher or much lower. We believe this because the volume is starting to tick up with volatility ticking up while the stocks are moving sideways. So we believe it's going to be looking down. So everything that we've seen so far is allowing us or leading us to feel a little like, hey guys, but what does that mean to Eli Lilly, right? Because that's possession. I care about that. Because if everyone believes the market's going to go lower and Anthony, people got into Eli Lilly because it's a safe stock, well, if it's going to go lower, aren't they going to run to it? I don't think so. That's because what we said earlier was it's the most expensive safe stock. It has the highest price earnings multiple of any of those stocks, which means it has a lot of people that made a lot of money, which means if a market's going to move lower, wouldn't it behoove someone to say, all right, well, it's good. This stock is 32 price earnings multiple, but that stock's only 18. It seems like people are going to sell this one and buy that one. So let me get out of here before they do, right? So let's take a look at sectors. This is the communications ETF, which is like Facebook and Google. And we're just going to run through this and see if the charts tell us anything, right? Okay. So this looks like it's lower than where it was. This is the consumer discretionary, which is actually, it's at a 12. We'll put that in our super duper list. Now, consumer discretionary has what stock in it? Tesla. So in fact, if you were looking to short something, this pop is simply one stock. XLP, consumer staples. This is your safety. This is consumer staples. This is Johnson & Johnson, Philip Morris, Procter & Gamble. No matter what the economy does, you need to buy Band-Aids. You need to buy toothpaste. You need to buy cigarettes if you're addicted, right? That's this stuff. And it's moving lower. Energy. Look at this run. Woo! Down. Woo! But what does this look like? A double top. So what do we think of energy? We think it's going to come down to at least here, right? That's what, like 15% maybe? No, 10%? XLF, these are the banks. Banks are important. Banks fund the economy. Banks are everything to an economy. The banks, and before you say, Anthony, no, they're not. The banks get bailed out when the economy crushes, like when it falls, because there are loans and all the rest, which means that's a, what's the word I'm looking for? A moral, whatever. The point of the word I'm trying to describe is, if you know you're always going to get bailed out, you continually just get larger because you know you're going to get bailed out. If you could tell the government, hey, listen, if we go down, the whole economy goes down, and they come running every time, well, then you could cry wolf as much as you want. Meaning the banks constantly expand to be larger and larger. Meaning they, by de facto, are the economy. So if you see banks going down, that's a problem. So let's see, up, down, up. Is that a lower high? It is. Down, up. Is that a lower high? Yeah. Is that a failed double top? Yeah. Is that a failed triple top? Yeah. So the banks are telling us something ugly is about to happen. XLV. Oh, healthcare. Love it. All right. So healthcare is up on the day, but what do we see? Made its high here, came down, moving up, higher high than yesterday, higher low. So it's still constructive. But if it all of a sudden fails today, then that's a precipitous for it going lower. So if we drew a trend line, right? Oh, your butt. If we drew a trend line, what we would see is that this is trend, right? Okay. If we drew another trend line, we would see that this has been the trend as of late. All right, so apparently this trend line is from here. Okay. All right. And then that means this is like this. Okay. So where are we now? We're kind of in this, which means healthcare is either going to go this way or this way. We tend to think that it fails here and at least comes down to here and probably even a little bit lower. So that's our belief on healthcare, although it's up today and that annoys us. Industrials, this was what builds the economy. These are the people that come and they tow trucks and Caterpillar and John Deere. Now, this is a little deceiving because there's a lot of agro business in this, like John Deere, which is doing really, really well. And then you have construction business that presumably is doing well because housing. But if something bad is going to happen in the future, you're not going to build that many houses. Therefore, this would show it. Let's see a trend line of what it looks like. Okay, you're still holding trend. So at the very least, everything looks like it's going to come down. Maybe not so bad. We think it breaks trend lines, but who knows? Materials. Oh, it's at a 12. Let's put that on our super duper list. Started high. It's been selling all full day. And all day meaning like an hour and a half. It made a lower low and a lower high than that of Friday. Look at the volume. There's no one there. But this volume looks like it's going to be higher than that volume. So if it's down on higher volume, not good. Real estate. Now, what makes the real estate index so interesting is it has a dividend, 2.63%. Real estate, if people can't afford to buy houses, they must go ahead and rent. Real estate, if you believe that rates are going to go up in the future, which means the economy moves lower, means that rents are going to then move lower. Meaning if you buy real estate today at the prevailing rates, then you are going to do better than real estate locking in rates a year from now. Meaning this would be deemed as a growth sector, a safe sector. Oh, I could buy the rates of people, having to buy real estate today where rents are up 10, 15, 20%. I could lock those in for people that are going to get in 3, 5, 10-year contracts. Great, I'll do that. That's this. XLK, that's Tesla. XLU is utilities. What are utilities? They are Con Edison, Jersey Energy and Light. They are your power companies. They are the last bill you forget to pay because then your power goes out. Meaning, if you think something bad was going to happen, you would run to this. Take a look. Okay, so let's go take a look at our super duper list. Eli Lilly, I hate you. All right, look at that. It got to 292. Now it got to 289. So again, it started high. So how do we know that, right? So let's see. Over here, started high, ended low. Now, what am I looking at? If you take a look at this line, you'll see there's a line on the left side and a line on the right side. The left side's where it opens, the right side's where it closes. So that being said, you can see it started higher and closed lower back on the 22nd. On the 23rd, it opened higher, closed lower. On the 24th, started lower, ended higher. That was the only day. Well, actually, the next day too, but by like a couple of cents. And then today started much higher and is now currently much lower. So let's see. All right. So what do we have? So we do have a 17 red and green about to curve up on the buy side. Overdue required. Okay, sorry, I was looking at something. So what is this? This is bonds, which means this is telling you. So, okay, 17 red and green, do you think it goes up? Yes, of course, right? Does that mean you buy it yet? No, we kind of wait to the 20s. But what is this? It's bond price, which means people are going to start, for this to go up, people are buying bonds. Why would anyone buy bonds in an economy that's doing so great, that the stock market's going? They wouldn't. They would only buy it if they thought something bad was about to happen. It's right here. All right, what's this? Ooh, 16 red and green. What is this? The yen. Now, when a market goes lower, is this? Yeah. When a market goes lower, the yen is called a carry trade. So the dollar goes up, but people go ahead and flood to the yen because the yen is a safe currency that has an interest rate on it, right? Actually, I forgot the dynamics of why this happens. The point being, if the yen goes up, it's usually preceding a market going lower. 16 red and green. What's this? 14 red and green. Oh, 10-year bonds. Bonds are looking to go up. Now, Eli Lilly was a 19. This was a 20. What do we see here, right? Volume going down as stocks going up. And we see this crossover. We really want to see it cross this line, but it crossed over and it's moving lower. Now it's touching the red line. If we did not short Eli Lilly, we would be doing it today. So we feel good about this week. Now I got to tell you, a 22. Okay, let's play a game. If I did not short Eli Lilly, would I short it over this? Well, this didn't cross over yet. It's still going up. So the answer is no. But is it possible that I might be able to short Eli Lilly, make a couple of dollars, and then move it to this? Yes. So we are firmly watching this. And what is this? It's real estate investment trust for old people, senior living portfolios. Dollar Tree. Crossed over, it's starting to move lower. What's Dollar Tree? It's a discount department store. Wouldn't you think people would go to discount department stores if things got bad? Well, how bad are things about to get that this stock is going to move lower? I don't know. A lot of things are telling us something bad's about to happen. ETRN 21 didn't cross over yet, so it's still going up. This is an energy stock, oil and gas pipelines. But energy looks like it wants to move lower, so we'll see. 21 did not cross over yet. Merck, 21 did not cross over yet. Caterpillar, 17. Ooh, that's like a fresh cross. But we want the cross to be over the red line. So although we think we're going to keep it there, but we would not be jumping in this because we're going to hold our standards to crossing over this line. Trinity Industries didn't cross over yet. This is trucks, manufacturing. That's not good. Look at this Japanese yen. So for my friend Don, who's on this, and he does pay attention to things like this, Don, on a daily, I would be looking to buy the Japanese yen sometime soon. Soybeans, remember we talked about how we believed it was going to move lower? There it is. In fact, we talked about it because on a weekly chart, we saw this last week, 20. Now it's 21, and look at that cross. It's happening right now. So if you are looking to take a short position, which we, full disclosure, we had this on our emails all week. So this isn't like Anthony did it today. We forecasted this. You still have a chance for soybeans. All right. Litecoin is now at 15. Tether or Tron is now at 15, which is quite funny because these were leading the crypto index the whole time. So for whatever reason, these were telling you things were moving up, which means can these also be the ones to tell you that things are about to move down? I don't know. EEM, we would like to be on the short side, but I was just looking at that over the weekend. Don't see anything. And these we just added. So we're going to leave it there. I'm going to go ahead and do a little work and put together an updated list for tomorrow. Because as you know, Tuesday to Friday, only emails come out and we do the updated super duper duper list. We're going to see if there's any more things to buy and any more things to sell. Eli Lilly, every time I look at you, you're going higher. Please stop. And that's that. So that's where we stand. Let me go ahead and stop the share. See if we have any questions in here. Joined late. Are you holding your short position on Eli Lilly? Yes. What we said before was Eli Lilly, if it crosses over and makes a new high over 295, we will close it. If it's stubbornly over 290 by the end of this week, we will close it. Those are the two situations we'll close it with a loss. We believe this week is a precursor to something ugly. We believe that this market will take a pullback, whether it be the latter half of this week or next week. We believe it's going to be one that's going to pull everything down with it. Therefore, we believe our position is good. If we did not own it, we will be putting it on today. That's our position on Eli Lilly. And we're going to end this, in which case we're able to download, then upload it into the group. So if you want to check our group in, let's say, 45 minutes, you'll have the full version of this. Totally love everyone and have the best week. And thank you for so many people joining, so many new names. And totally cool. Join V at 2 o'clock today. You all received the same email today. And then I'll be welcoming our new RHINO team on this week. We hired 3 new developers. Tomorrow, I'll be closing a very, very large deal with Salesforce to welcome them on board, which means Wednesday, we will have a very super duper duper version of RHINO hosted by me at 2 o'clock. And Wednesday is what? The 30th, which means Friday's the 1st, which means RHINO coin goes up another 25%. So I really, really, really want to tell everyone, especially in RHINO Wealth, to be on that call Wednesday, because the best performing asset that I could tell you, in my opinion, over the next 5 years is going to be RHINO coin. And it's not even, there's not even a close second. In fact, second place is so far behind that you would say it's first place and 1,000th place. We'll talk about that more Wednesday. So love everyone. Thank you. And I'll see you Wednesday. But say hello to V for me at 2 o'clock. Bye.